everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. It's the 26th of August. Almost getting ready to move into fall. Fantastic time of year, isn't it? I mean, everybody loves fall. Quick reminder that everything I do here is for educational purposes only and not intended as investment advice. So, what to watch this week? Well, today we had durable orders come out, um, and they had a bit of a beat. So, that was kind of nice. Came in at 9.9%. Previously, it was a negative number. Now, durable minus transportation was minus 2%. Tomorrow we have consumer confidence number coming out. That's not going to move the market. Wednesday, little Fed speak, won't move the market. Big news days coming up Thursday and Friday. Initial jobless claims Thursday. Retail inventories, the GDP number. Those are all pretty important. And on Friday, you have the PCE number. So this is what the Fed looks at when measuring inflation. Plus, we have consumer sentiment. So Thursday and Friday, really important. Wednesday, after the bell, I will get to that. Big earnings announcements coming up. Last week's heat map, more green than red. So most of red was in the technology space, plus Tesla, plus Amazon. Year to date, it's been a fantastic last 12 months. Got NVIDIA up 168%, Microsoft 29, Apple 28, Alphabet 28, Meta 81, Amazon 33, Lilly 73, JP Morgan 48. Yeah, the last year, I would say a good overall rate of return for the last 12 months is something north of 25% for sure. Keeping score year to date, S&P is up 18.1, NASDAQ 19.1. The Dow, a little more conservative at 9.2, Russell 9.4. The big winner has been Bitcoin. Market breadth. I always like to look at number of winners versus losers. So we had 2303 on the New York Stock Exchange, move higher, 584 or lower. But take a look at new highs and new lows. 435 new highs, 52 new lows. Fantastic. On the NASDAQ, 3,294 moved higher, 1,260 lower, 484 hit new highs, 221 hit new lows. Terrific. Sector returns year to date. So the S&P is up about 18%. So 1, 2, 3, 4 sectors have beaten that. The balance have underperformed to a greater or lesser extent. So tech is up 27%, communication 23, utilities 19, financials 18. All the rest have underperformed, including staples, not by much, at about 16%, healthcare 14%. Industrials 13, and the rest are all single digit returns year to date. Percentage of stocks trading above their 50-day moving average, 75%. Pretty good. We have definitely broadened out the participation. Jobs picture weakening, exactly what the Fed wanted. Unemployment is moving higher. New job creation moving lower. The fact that we're going to be getting a rate cut does not mean that automatically the market goes higher. Usually it's true. It depends on why they're cutting. If they're cutting because the economy is slowing, well, that's a problem. but much more positive following a rate cut than negative. For sure. This goes back to 1929. Deeper dive into inflation. So I'll tell you what's happening is the non-discretionaries, those prices continue to be high, like food. Discretionary is what has fallen off. So we need that non-discretionary to slow down. Market broadening. So of the S&P 500, 296 of those stocks are outperforming the market, which means, by the way, there's 200 of them you would want to own. Economic surprises, that's not been great. It's sort of been trending up, you know, if we were to draw a trend line here, but we're still below the zero line. Investor sentiment, people are feeling pretty spunky. So when asked what they think is going to be happening over the next 6 months, typically 37.5% are bullish. Now it's 51.6. 31% are typically bearish. Now it's 23.7. Investors are feeling good. When's Fed going to cut? They're going to cut in September. How much? Right now, it's forecasted to be a 25 basis point cut. That is 70% probability of that happening. And we're expecting another cut in November and a 50 basis point cut in December. So 25, 25, 50, that would give us 1 full percentage point. That would be huge for the market. Got more earnings this week. Last week, only 2% of the S&P stocks reported. This week, 6%. We've already come through the 2 big weeks. And the market movers, check this out. After the bell on Wednesday, NVIDIA, CrowdStrike, Salesforce, Affirm, and Hewlett-Packard. On Thursday, we have Dell. So those are your potential market movers, but a lot of them are bunched to after the close on Thursday. Let's take a look at the charts. Hope all of you had a nice weekend. See what the S&P 500 is up to. So we are still well above the 50-day. It looks like there's some rounding. We're kind of have run into this support or resistance level. Can we break through that? We'll have to see. But overall, I would say we are at this point cautiously bullish. And then on the Qs, they're really at an inflection point right here. Can we stay above the 50-day? That is a huge level, right? This market's going to continue moving higher. That will have to hold. IWM, here's the Russell 2000. Great shape. Yep, everything on it looks terrific. By the way, our numbers for the first half of the year on closed trade ideas of the week, we've closed 74 trades. Average return has been 18.9%. Average holding period 19.2 days. Not bad. Tracking at about 1% a day. Past performance doesn't guarantee future results, but it's all we got. We can't give you future results, can we? All right. Well, thanks for being with me again. Always love the opportunity to meet up and share, and I will be back with you next week. So until then, be safe, be blessed, and bye for now.